For most companies, fixed assets are the single largest item on the balance sheet. Cash, accounts receivable, and inventory have significant internal controls built in, controls that are monitored by internal auditors, monitored by external auditors, subject to all sorts of rules, and the effort that is applied to cash, receivables, and inventory is very substantial in terms of internal control. Unfortunately, the largest item on the balance sheet, the fixed assets, has relatively less internal control associated with it. The rules, the Sarbanes-Oxley Foreign Corrupt Practices, require, in theory, internal controls commensurate with the dollar amount of the fixed assets. As a practical matter, many companies do not put significant resources into fixed asset control. The primary reason is that there are typically a lot of line items in fixed assets. Many companies are still using Excel spreadsheets, and there is virtually no flexibility in terms of ease of use of a fixed asset record on Excel. An Excel system can compute depreciation for books and taxes relatively simply. It cannot easily calculate different depreciation for taxes as opposed to books, which will save money. It does not provide an easy-to-use system for looking at how fixed assets are insured. It does not provide a good system for how fixed asset records are communicated to for property tax purposes. There are multiple uses, in other words, of property tax records, and without a good software system, it's very hard to get the benefit out of that information that you've captured once. An integrated software package that starts with the project management, the acquisition of the asset, transfers of the asset, maintenance expenses related to those assets, and ultimately disposition of the assets. An integrated package simplifies the overall internal control. The major problem in internal control of fixed assets is that there is very rarely any attempt to match up what is on the record with what is actually in the shop floor or the office floor or the IT room. Once an asset is established on the fixed asset record, people assume, well, it must be there, it's fixed, and we don't have to worry about it. The fact is that when you take an inventory of fixed assets, typically 10 to 15% of those assets cannot be found. And in that situation, at least according to current accounting requirements, you have to take a charge to P&L for the assets that are no longer there. The fact is that while you can't find 10 to 15% of your assets, there are assets that are out on the floor that you can't identify on your project record. The fixed asset record, in other words, has assets on them, what we call ghost assets that aren't there, and it has what we call on the shop floor zombie assets that are there physically but you can't find on the property record. The essence of internal control is to eliminate that kind of problem, and a modern software system, package of software integrated systems will alleviate that problem and will permit a company to have true internal controls on fixed assets consistent with the kind of controls that they're maintaining over their bank accounts, cash, over their accounts receivable, and over their inventory. And if you've got the majority or the largest part of your assets are fixed assets, it suggests that you should have the same proportion of your internal control efforts on fixed assets. Yet without a good software system, it's almost impossible to accomplish.